Glenn asked me to give an example of something that we've done before. So this was client X. Client X called in and told us that he owed about $150,000 and he wanted to file an offering compromise. My team had him to complete a client profile. On the client profile, he put that he filed all his taxes, and then he really wasn't sure exactly how much he owed now, but the last letter that he received was about $155,000, and he had been making payments. All right, so he said he didn't have the money to pay it, but he really wanted it gone because it's been keeping him up at night. It's been worrying him. And he said he wanted an offering compromise. So the first thing that I told him was this, honestly. Okay, I get that you want an offering compromise, but you might not get one. It just depends on what your financials say. But I don't even start without my phase one. And then with my phase one, when I told him it's $7,500, it's $750 for individual, but it's $1,500, for married filing joint. And they did it. Him and his spouse, they did the $1,500, but they only did for federal. And I charge it for both federal and the same for state, $750 for state, and then $750 for the spouse as well. All right, so during phase one, I told him I will find out everything the IRS shows for you. He agreed, paid for phase one. My team had him to complete the form 2848 and faxed it in. So we know why we did the 2848, right? Because the IRS says after COVID, if you go into ACS and you want a compliance check, you got to have that 2848. So that was the reason why we did the 2848. All right. So a couple of days later, after they faxed it in, I called in and done the compliance check. They informed me that client X had indeed filed all of his tax returns, but he was showing that he owed $288,873. So it wasn't $150,000 like he thought it was. It was $288,873. And they said that he had been filing Schedule C's. The reason that he was owing so much was because all of his income basically was reported on those Schedule C's. So I asked for those account transcripts. Remember how I said in an account research, I asked for the last 6 years of those account transcripts. I asked for the account transcripts. I pulled it through my resolution software to generate that report that you saw. The report shows me everything in that one place. So then I was able to let him know, hey, this is what the IRS shows on you. So now he's able to see that big 288,873. He's able to see the years and everything, like how that report showed. He's able to see, like in the graphs, what year was higher, what year was lower. He was able to see it all. And then I told him, I was like, now my phase one is complete. This is the phase one. I recommend you go to my phase two. Not that you hadn't filed all your returns, because they said that you had filed all your returns, but they also told me that you've been filing Schedule C's. I'm going to recommend right now, especially if you want to do this offering compromise, that we take this Schedule C and we make it an S Corp. When we do that, one, it's going to save you so much money, but two, you also have to pay yourself salary. That's a talk that I automatically have with them, so that they're made aware that they have to pay themselves salary. A lot of people like to do distributions from the S Corps, but if you all know, the IRS says they don't like the distributions. They don't like it. And one, they shouldn't be taking it if they don't have any basis in the company. So I don't even mention to them about taking distributions or anything. I just tell them there's a requirement for them to pay taxes, which is that W-2. So then I said, secondly, I went over the report with him, showing him how much they owed and let them know all of their returns were showing filed. I told them I wouldn't have to complete my phase 2, but I would start with the phase 3 normally in their situation. But again, because I needed to change him into an S corp, we did do the phase 2. All right. They agreed and we moved to phase 3. Actually, we worked on phase 2 and phase 3 at the same time. It was, the same time. In phase 3, I had them to complete a financial analysis. I have them now complete another organizer in our system, which I described that earlier. It has them attach all of their supporting documents to it. And then me and my team, we go back and we enter it into the IRS solutions. And Tammy, just in case you're going to ask if that IRS solutions allow them to do it, it does. It allows them to do it themselves, but I don't want the headache of them calling back and forth. I entered this number, but how do I do this? So you know what I do? I've learned the hard way and I just automatically do it. My team is going to do it. They just going to give us the supporting documents. All right. So, and I know we stress a lot that we need to have engagement letters for everything we do, and we do. So for me, I do an engagement conclusion and an engagement for everything that I do. So each phase, there's an engagement and there's an engagement conclusion. So I don't want anybody to think just because you gave me $1,500 that I'm doing everything for you for $1,500. And y'all know why I do it, because I learned it the hard way. All right. So again, I do that engagement conclusion after each thing. So with him, and I'll skip, let's see. All right. So yeah, we completed the offering compromise for client X. We actually requested to settle at $12,328 instead of his $288,873. So he was super happy. I mean, he was just super happy. They didn't think it was going to happen. They were super happy. But like I tell them all, I'm going to send it off as this, and it's up to the IRS to come back to try to negotiate or whatever. So actually after 18 months, we received back the OIC where they were accepting it, but they were accepting it at $16,328. So I had an opportunity to say, to do an addendum and say, no, we're not going to accept that 16,000. We want the 12, or my clients could sign the OIC that they sent back saying that they approved it for 16,000. Y'all already know what the client did, right? Oh yeah, we'll take 16,000. We'll take it. We'll take it. So we went with the 16,000. But I told them we can fight this. They didn't want to fight. They were just like 16,000 or 288,000. We'll take 16,000. And they were like, when I tell you super happy, they were super happy. And they have now really become one of my best tax prep clients, because they understand if they don't, like, they have 5 years that they have to stay in compliance, or they'll owe all that money that got released. They'll owe it again. So they understand that. And they now, if they get any kind of letter, they're like, hey, Shanika, what do you think about this? What do you think about this? They understand the value. And I don't care if I go up, because I raised my S corp prices this year, and I think their S corp price this year was about $3,500. They didn't even blink. They were just like, hey, do I still pay my deposit and then pay the other half? And I was like, yeah, yeah.